August 26th, Friday, market analysis by Stan Ehrlich. Good morning. Currently 7:39 a.m. California time. We have a rock and roll this morning. The Fed opened its mouth. Market didn't like it too much. We'll get into the details in a moment. So we're going to talk about the gap closure, and we're going to talk about current conditions and some current charts, specific trades, and ER signals in general, and maybe we'll get to some cyclical analysis also. But now we have that what I thought was, and now it's pretty confirmed, a breakaway gap partial closure. And that stands for the S&P 500 or the SPY, which I watch all the time, the Dow Jones with DIA, which I watch all the time, and the QQQs as well. And I like the Russell 2000 as well. So here we go. Earlier this week, on Monday, we gapped down, creating a large, what I thought might be a breakaway gap. Breakaway gaps are less likely to be filled than regular gaps, which are common gaps, exhaustion gaps, and maybe midway gaps. So this exhaustion gap on the way up yesterday was filled partially in the S&P and the Qs. The DIA gave it a good shot but couldn't quite do the job. And the 2000 actually did the job completely, or finished the job. So we have 1 out of 4 closed. This morning, the Fed, Powell, says that, and I don't know what it said. I'm a technician. All I know is that they opened their mouths and caused a variety of bumps and grinds here real quick, creating a bearish engulfing, my favorite candlestick, and it's big. We have a high higher than yesterday's high, which closed the gap on the spider and the QQQ a little bit more, leaving a small amount left. And when I say leaving, I think that's it. We're done. Also, it left almost all the gap in the DIA. Very little was closed. All four, well, not the 2000, it missed by a tick. It didn't make a higher high. We have the major threes, bearish engulfing. It's going to be very difficult, if not impossible, for the market to come all the way back up to unchanged, which is where it closed at the high of the day yesterday. And so I'm very confident that we're going to have a bearish engulfing by the close. Maybe not this low, maybe lower. Where are we right now? We are on the verge of having the potential of a lower close, lowest close for the trend down. And if that happens, we will be very close to, if not under, all of the previous lows as well. Remember, the day is very early. So we might close in total new low ground today, which would be great. It would be exactly what I was talking about all week long as far as the way the market could act. And I think that this is the beginning of the next leg down, and it happened very, very fast. So you need to be on your toes and do something about it before all of this movement. We're down 550 already on the spider, 416 lower on the DIA, and 6 1/3 lower on the QQQ. And they're all well below yesterday's low. And again, not only close to having the lowest close for the move down, but close to having a closing price and, of course, a low, lower than every other low we've seen so far on this move down. And I remind you that we got a bearish engulfing ER red sell signal smack dab on top of the QQQs on this last rally, and that's exactly what the system is built for. And it's happened again. When I say again, look over here. On November 19th, 21, my system caught the high day for this bull market since the COVID crash low. I'm sorry, you can't get more accurate than that. Next. Well, I think we're on our way down, and I think by the end of the day we'll be significantly lower. If not, We're going to close in this ballpark price range, maybe a little higher than we are right now, maybe down 2, 3, 4 points instead of 5, but still a bearish engulfing. And next week, I think we'll see new lows for the trend, if again, not already today. All right, enough time spent on the indexes for the moment. Individual trades, I'm going to, let's see here, show you we went short this morning on UNG. It was in my market letter to sell at a certain price, and that's exactly what the order that was placed this morning. It got overbought in the first several minutes of trading. That's why the price action is red on this 1-minute chart on UNG. So we had a loss for a little while, 20 minutes. Turned slightly profitable, slightly lost, and then it's starting to take off a lot better. Not a big deal so far, 19 cents, but listen, if the overall markets head south, this could be a very, very profitable trade. I can't tell you for sure, just an opinion. We're out of this trade. I don't want to talk about that one for the moment. We took a profit on this one, took a profit on that one. We have not gotten filled and probably won't get filled. This is the third day, my last day for a possible fill on a buy signal that just plain took off. So we didn't get an ER3 fill. ER1 did get long. Next, profitable trade, out. We sold short a rally high yesterday, and I want to talk about this one for a second. Our trigger point for a new short order was 4606. When it hit 4606, it was on the way up and didn't stop. We have a technique we nickname baby blue, and you can see a little cyan or baby blue line that goes up until it gets hit. Well, that is a new short sell stop that rises after the trigger is hit. It helps us get short at a higher price. Often, if we're wrong on the trade, we lose less. If we're right on the trade, which we are at the moment, $1.06 profit overnight on a $45 stock, about 2%, give or take a little. We simply have a bigger profit if we're right. So this one was right and then wrong and then right and so on and so forth. But the STS is now dropping significantly. Not a profit yet being locked in. It's a 15-cent loss, but not bad. Not bad. Next, small profit yesterday. This morning, here's a good one. The ER is geared so that if the market moves very, very quickly in your favor, we reach on a very short-term 1-minute chart an extreme overbought condition. When that happens, our sell stop, again, on a new long position from yesterday morning, any long, our sell stop is tightened up severely immediately upon getting extremely overbought. Normally, markets top out when they're very, very, very overbought. This isn't quite a good example. It is relatively close to the high. That's all well and good. But you'll see occasion, this is a spike up and it goes straight back down. Doesn't fiddle around like that. So I'm glad we had this trade. It was a nice profit. Looks like approximately $1.20. It took 24 hours. Next. This is a simple matter of getting in just a tiny bit too early. We came very close to the low early yesterday morning. That's good. STS rose very quickly on a $47 stock or item and simply got hit. Just a normal example of a profitable trade. Didn't take long, only a few hours, and we made $1.92. No, not too bad in a few hours on a $46 stock. Next, second day, a little earlier, we almost bought this. Came super close, but we did buy it just about, I'm going to say 20 minutes ago. Right now, it's a 19-cent loss, and our stop is 62.14, risking, wow, a little larger than I'd like, $2.94. It is a $65 stock almost. We'll see how this pans out. From just a psychological standpoint, I'm not too fond of this strategy of trade, that is, at the moment. So be it. Unable. Profitable trade. We just got in. Great. Oh, we love these. The market only for 60 seconds or less hit our trigger to buy. The low of the day so far, obviously, is 21.34, and we wanted to buy it at 21.36. We missed by 2 cents. I apologize. It is a slight profit of 8 cents for the moment, and now we want this to rally. But remember, I'm bearish on the overall market. We just had a huge reversal. We'll go back and take a look at those charts before we leave here this morning on a Friday. This is off to a good start, but hey, you know, if I'm right on the overall market, this one might fail. I hope it rallies enough to lock in a profit, but we'll see. Similar story here, came close this morning, then we got filled. And here, by the way, is a baby blue on the short side, on the long side of the market. The other example was rising baby blue to get short at a higher price. This is a perfect example of baby blue coming down to get a cheaper price on a new long position. We have a tiny loss of 17 cents at the moment, 13 cents. And we'll see how this pans out. But remember, I'm basically bearish, so any new longs here might make money. They might not. Not particularly optimistic. We're short early. This is the one we started with. Looks like it slipped off a little bit more. Let's go back to our index page. No new lows. S&P just stabilized here for a moment near the low of the day. It deserves a rest. Same. Let's touch on a couple other items. Cycle low in the E-mini I've shown you probably every day for a minute or two. I'm not sure this is the greatest cycle in the world, but it ain't too bad. Caught it in the late part of the window of opportunity, the green bar. That's the 10% of the cycle, 5% right and left. So it was just late in the window of opportunity, the width of the green bar. Caught it again just on the right edge. Here we have right and left, and we didn't catch it very well at all. It made some money. It was a little bit earlier than we expected. COVID low, need not say more. That was pretty good. That was so-so. That was pretty good, and so on and so forth. If you're more interested in how the cycle worked, the early cycle forecaster will be available. The Ehrlich reversal ER1 and ER3 will be available. We're going to have the relative strength index custom ER version available, which you see on the bottom of the screen. That's relative strength index. Good old Wells Wilder taught me in person how to fiddle around with the RSI. The will be available separately, and the paint bars that change the color of a candlestick will be available also in the near future. Euro dollar is starting to pop up a little bit. This system cycles, Ehrlich reversal, ER, work on futures, Miss Piggy, sell signal on the high of that rally, and today we're down a little bit, but it turned yellow yesterday, meaning that on my custom RSI we were oversold. That is a warning that the market might turn back up again. Now, yes, we're down a little this morning, but there's no new lows yet. That sell signal was great, almost the high of the rally. We cluster sometimes instead of just one signal, but we did catch the top of the market for months before and months afterwards on that bearish sell signal, February 23rd. Well, I think we are done for the day except for a quickie. No new news here. Sideways, a little sideways trading range, or maybe a channel or a pennant or something, but nothing significant. Thank you very much for attending. We had a great week here so far. That means I want to stay where we are price-wise or go down even more. Listen to the earlier videos, watch them, listen to them. See what I was saying before the fact. You have a great weekend. Thank you very much, Stan Ehrlich.